Hello everyone, we're just going live now and we're going to be talking about Facebook earnings. So let me just get this together. Alright, so as some of you probably know, Facebook had earnings today. There have been a lot of big companies doing earnings the last couple days. I'm just going to go over Facebook in this video. We'll probably do some other videos with the other ones, but I wanted to go live because there's just a lot to unpack and I wanted to get it out sooner than later. So basically, we're going to go through the earnings report and then we're going to talk about a few things about the company. So Facebook reported after hours today, and basically this is their second quarter 2021 earnings. So they wrote that they had a strong quarter as they continue, and this was from Mark Zuckerberg. They had a strong quarter as we continue to help business grow and people stay connected. I'm excited to see our major initiatives around creators and community commerce and building the next computing platform coming together to start to bring the vision of the metaverse to life. So they're going over the metaverse, which, putting that in right in the beginning of the earnings report is pretty key to show that this is really where Mark Zuckerberg's mind is on, is the metaverse with VR and AR and whatnot. So let's go through some of the numbers. So 2021 Q2 revenue was $28.5 billion for advertising, compared to $18.3 billion for advertising a year ago. So in the same quarter, so 56% increase. I mean, this is a massive jump in year over year advertising revenue. As far as other revenue, was 36% increase, 497 million compared to 366 million. We had total revenue coming in at 29 billion, slightly over that, 56% increase year over year compared to the 18.6 billion that we had in 2020's second quarter. Costs obviously rose as well. They rose 31%, so they didn't rise as much as revenues rising. And income, which was, came out $12.367 billion in income versus $5.963 billion a year ago in the same quarter. So it was a 107% increase year over year in the income from operations. So, I mean, the numbers are obviously amazing. Really, really great growth. Operating margin of 43%. So, they're having more leverage on their operating margin versus 32%. Tax rate barely, changed, went up 1%, their tax rate. Bottom line net income, 10.394 billion, another 101% increase over last year's 5.178 billion. So some other financial highlights. So this, we're actually just going to look at over here. So their daily active users, I mean, this is pretty impressive. Just looking, not that long ago, in Q2 of 2019, just 2 years back, there were 1.587 billion people using Facebook, or Facebook owns products or whatever, daily. In just 2 years, that's went up to 1.9 billion. It's over 400 million more people, 400 million people, a little less, using Facebook every single day. So it's a huge increase in daily active users over a short period of time. And, it's steadily increasing every single quarter, as you can see. As far as the US though, it is, luckily, I actually thought it could go down a little. It is stable. So I knew internationally they're going to keep growing, but it's been 195 million people since Q4 of 2020. We see that, it was 195 in Q1 of 20. It was increasing from Q2 19 up till it got to 195 in the US, 198. And then after 198, it started going down, 196, 195, and it's stabilized around this 195 million mark. So US and Canada, although I know there's a lot of people not using Facebook today, but they own products like Instagram and WhatsApp, which is, so they have a lot of users, but overall they are growing. I mean, it's pretty impressive, 1.58 billion to 1.9 billion daily active users. That's not even monthly. For monthly, it gets even crazier. We have 2.9 billion basically people, most of the world, not most of it, whatever, but huge portion of the entire world population. I would say most of the world that has connection to internet are using a product that Facebook owns. I mean, 2.895 billion people. So, and that's an increase from 2 years ago being 2.4 billion. So, huge increase. And a lot of the income increase comes from average revenue per user. So, it's not that there's, they are getting more people, but it's not just about more people. The reason we're seeing such huge numbers is if you go a year ago, they were making $7 on each user worldwide, whereas today they're making $10.12 off of each user. So huge increase. All of this is basically good. This is worldwide. This breaks it down if you want to look US, Europe, Asia, rest of the world. What this does is show that in a place like the US, they're able to make $53 on every single user. Whereas in rest of the world, if you're not looking Asia Pacific or Europe or Canada, they're only making $3.05. But when you go from making $1.78 to $3, that's a huge percentage increase. And as we see this $3 number continue to go higher, eventually hitting, who knows if it'll ever reach the same as US and Canada, but as it continues to go up to prices that maybe, eventually it gets to prices kind of like Europe is today, and maybe Europe moves higher to be closer to where the US is, it's going to basically provide massive amounts of income if Facebook can keep these users using some product they own, whether it's Facebook or Instagram or whatever they do next, the metaverse with the Oculus, etc. So that's basically, besides going over that, we're going to get deeper into the numbers later in this video, but as far as everything else, they've always, held a very small amount of debt, which we'll look into later. They have plenty of cash, cash equivalents of 64 billion to end the quarter. And what they didn't, all right, so all of that was good, but as you can see, the stock was down in after hours today. So it was down 3.5%. The reason it was down 3.5% is what people didn't like is their guidance. So they basically say they had a bunch of growth, putting this all into, I read this already, but summing it up, they're basically saying they have a bunch of growth, but they expect the growth to kind of calm down. Because once it starts comparing to the big numbers they had a year ago, going into the second half of this year, the year-over-year growth numbers won't look nearly as good as they look right now. That's basically what it was. So the guidance wasn't as good as people wanted, and I think that's why we're seeing a dip in the stock. So the stock is 360 at the close of after hours. So he talks a lot about the metaverse, and if any of you've seen the movie Ready Player One, if you haven't, and you want to just kind of understand what the metaverse is, I'd say that's a good movie to kind of show you. There's games like Roblox, and that's another publicly traded company now. Basically, the metaverse is a virtual world where you can basically do anything, and you can interact with your friends, and his idea is in the future, through virtual reality and augmented reality, there's the regular world, but there's also this virtual world where if you want to see your doctor, if you want to do anything, you can do it from your home. You just put on virtual reality glasses or augmented reality glasses. You're at the doctor's office, you see your doctor, you talk to him, tell him what's wrong. It doesn't matter. Anything from seeing a doctor to playing games with your friends to, learning about the world and seeing, different types of geography and anything you can imagine that, can basically get created. So that's a short version of what the metaverse is. I actually did a little write-up about a little over a month ago. I did it on June 10th, and I called it Facebook 3.0. Now, the reason I did that is basically because I think Facebook is in this third phase of life. The first, what I kind of sum up is that the first Facebook was basically the original social media website, facebook.com. So similar to like MySpace.com or whatnot, it was just Facebook.com. Here's a social media website. This is what we do, and let's get into ads, etc. Then I kind of sum up that Facebook version 2.0 is let's kind of own social media. It's not just this one site we're known for, which is Facebook, but let's buy Instagram. Let's try to buy Snapchat, which didn't work out. Let's buy WhatsApp. Let's buy these software social media companies and become known as not just one social media site, but the biggest social media conglomerate. And they succeeded in doing that. And then I go over what I think Facebook 3.0 is. And I think Facebook 3.0 is a mixture of hardware, software, AI, and augmented reality, virtual reality, etc. So it's the metaverse that Zuck has been talking about, but it's the biggest key is it's also the hardware, because Facebook's always been in software, but they never had the hardware piece of the puzzle. So I think the first step into this Facebook 3.0 was their purchase of Oculus. They bought Oculus. For those who don't know, Oculus makes virtual reality headsets. They used to have to be tied to a gaming PC and need all this power. They still have, headsets that you can plug into your computer and whatnot, but they make them also now with no wires, and that the average person can buy it, throw it on, and be in virtual reality and use their software, play their games. So they got into this VR business, and they started deciding, they need to own more of the hardware business, because you can only do so much if you just own the software. It's why Apple's always been, they've been so important. I don't know who said it, but I know Steve Jobs brought it up once, saying that if you really care about software, I don't know the exact quote, then you have to, or if you really care about hardware, then you have to care about software. And it goes both ways. And that's why Apple's always run having their, software and their hardware tie together, and really they can control the whole ecosystem. So Facebook started getting into hardware with the Oculus. They got into the Portal, which is basically like they want to compete with being in the home with like Google Home and Alexa devices and things like that. So they have their Portal devices, and they've been expanding rapidly into these kinds of products. But they also have been showing off, and they're actually a lot more open than a lot of tech companies are with the research they're doing. So I kind of showed off some things here, like if you see this research prototype right here, this is a wrist-based augmented reality kind of gesture device that they kind of show they want to be able to merge the virtual world with the real world. So they show how you can use it to it can kind of, I don't know exactly what it's doing, the technology behind it, but it can tell like if you're typing. They show this like demo where they're typing and you're messaging with people on a virtual keyboard. This is a Twitter, so Mike, who is basically, I forget if he's the lead of AI or the CTO at Facebook. Let me just jump on and make sure. Mike is, something went wrong. Let's see. Was he CTO or was he lead at CTO? That's what I thought. Okay, CTO at Facebook. So Chief Technology Officer at Facebook. So he wrote, here's some mind-blowing technology being developed by Boz Tank. Boz works for Facebook with the augmented reality team, virtual reality team. He runs the, I believe, like AI labs or whatnot. Was it? Yeah, Reality Labs. So Facebook, the Reality Labs vice president there. So he's working on all this new tech. So let me just show you this video. So he's just showing how like the virtual world, because of this bracelet they devised, this wrist-based system that's reading the pulses in your hand or whatnot, it can tell what you're doing with your hand just by wearing it on your wrist. So they're kind of showing, that these kinds of products, obviously this is still in development, so it won't look chunky like that, I would assume, in its final version, but they're trying to develop everything you're going to need to basically interact with an augmented reality world. So with the AR glasses they're building. They go on to show this here. I'll play this little video on Twitter too. I know it's probably pretty small. Let me see if I can zoom in a little for you guys. So he's showing that he's typing just on a desk, but because he has those bracelet things on, it's writing, and even when he's not typing it perfectly, since there's no actual keyboard there, it is their AI system is basically knowing, all right, he probably meant this, and it's auto-correcting him as he's writing. So really interesting tech that they're working on. And they're continuing to push basically boundaries of AI. So computer vision, which I think is an extremely important piece of the puzzle when you're a leading AI company, which is what Facebook's trying to get into in this Facebook 3.0. Computer vision is a huge part for self-driving, for different things. I know a lot about it because of my research with Tesla and their computer vision that they're working on to solve autonomy. But basically, again, what's it called? Mike wrote, here's our new computer vision system achieving state-of-the-art results for image segmentation without needing any labeled training data. This new model was trained on a random unlabeled data, but quickly achieved state-of-the-art results. Now, I don't know enough about, how impressive this should be, but the fact they were putting it out, and I saw a lot of impressive people in the AI industry commenting about, the progress Facebook has. So it's just, they're being pretty open about what they're working on, how they're working on it. So I thought it was cool. There's Project Aria, another huge thing that they showed off, which everyone knows, the Apple's working on AR, basically glasses, and Facebook wants to compete in that field. So they have this thing called Project Aria, and it's these glasses that they're making. And they even formed a partnership with Ray-Ban already on them, so it's pretty interesting. And the idea is it's going to be able to have sensors and cameras and whatnot on it, so that you can interact with a virtual world and augmented reality, basically in real time. So it's still early days for this type of products and this type of stuff. But the reason I'm showing you all of this is to show that, a lot of people say oh, Facebook's dead. No one's going to use Facebook. Young people don't use Facebook. They use Snapchat. They use this. And I just want to, show the bull side that even if you don't use Facebook, a lot of people still use Instagram. And even if people stop using Instagram, there's an entire side to Facebook that is basically, just in its early developing stage, which is the hardware, the augmented reality, the AI, and virtual reality systems they're building that are not productized yet. And that's a huge area that could be much bigger in the future. A lot of people say the future augmented reality glasses and whatnot will replace, the smartphone, it's the next evolution. Will it happen? I don't know. I think it's definitely going to be a product people use. We'll see how big it gets. I think if it is able to do the things that people are saying, that they're working on, and it actually accomplishes it in a meaningful way, then yeah, it's better to, if you're going to interact, you're going to text, you're going to look something up, this or that. Right now, how do you do it if you're around people? You look down at your phone and you're looking down, and everyone can tell you, all right, your attention is gone. You just looked away from the whole conversation. And it's not a great way to live. But if you can look up and you're with everyone and you're also able to, see there's a text here or this or that, you're a lot more in the moment still, being able to see it on the side of your eyes versus having to look away from everything. So I do think there's a lot of potential there for the future. And to go on with their hardware, Facebook is working on a smartwatch. There was rumors about it, and people at Facebook commented about it on Twitter. They're saying it's going to have cameras on it. So, there's who knows what it's going to come out like, but clearly they have ambitions to compete in hardware. They don't want to just be the social media website anymore. They want to compete for, if you're thinking about buying an Apple Watch, they're going to want you to buy a Facebook Watch. Who knows, if they succeed or not, but it's clear they have the ambition. So Boz, we talked about him before, VP of Reality Labs. He tweeted about the AR glasses and investing in technologies across the board when someone was mentioning the smartwatch. So this guy, Alex Heath wrote, details on Facebook's first ever smartwatch, which it plans to debut next summer to take on Apple. 2 cameras with a display that can be detached from the wrist and used like a GoPro. Will integrate with Facebook's apps, including Instagram. He said, we've said we want AR glasses to be truly useful. We're investing in technologies across the board that will make that interaction feel more natural and intuitive. This includes research like EMG, haptics, adaptive interfaces that could come together in a wrist-based form factor. So maybe that wrist thing we were seeing earlier ends up just being your watch, and your watch gives the ability for you to do more virtual augmented reality things by having it on. We don't know, we'll see how that all goes, but he didn't deny any of this stuff either. So, the camera does come off of, the display does come off of it, and you can throw it, like a GoPro on a helmet or different things and do stuff on the go. It's going to be interesting to see how it plays out. But what I thought was most interesting is he said it's going to debut next summer. And this was, literally like about a month ago. It was a day before I wrote this post, so June 9th, 2021. So, yeah, I mean, we might be seeing what it looks like next year, so it'll be interesting. So basically, that's what I think of Facebook 3.0. And now let's get a little more into the stock and a little more stock analysis. Is this a stock you should buy? Is this a stock you should sell? Are you holding it and whatnot? I hold it in my account for full disclosure, just so you know. Everything I'm going to say is not investment advice. I'm not a financial advisor, but let's just go through the numbers and see what I personally think. So first, we're just going to go over income real quick. I want to do this just to go over growth and whatnot and give you a picture of how things are going. So on an annual looking picture, basically, their revenues went from 2011, it was 3.7 billion. And look at these increases year by year, 3.7 to 5, 5 to 7.8, 7.8 to 12.4, 12.4 to 17.9, then to 27.6 billion, to 40.6 billion, to 55.8 billion, to 70 billion, to 85.9 billion. I mean, and that's 2020, and we're having huge increases. We just had Q2 2021 showing an increase year over year to 2020 of, how much was it in revenue? Total revenue, 56% increase, a 56% increase. So, I mean, they're guiding for lower in the second half of 2021 compared to how it's doing in the first half of year over year. But I mean, as of what we see so far, the growth is literally like incredible. And the profits too. I mean, look at this, 2.8 billion in 2011 to 69.27 billion in gross profits. And net income, they're dropping. Look at net income in 2019. Net income was 18.5 billion, and net income for all of 2020 almost $30 billion, 29.15 billion. In 2017 it was half of that. So the growth is incredible. I'm going quarterly just to show you. It's literally incredible. Going from, what is it here? 2021, we talked about 9.5 billion net income for March. Now this is not showing the most recent one that came out yesterday, but the growth is incredible. I mean, it's pretty clear on that. Let's go back to annual. So another thing to point out is a lot of these tech companies, they issue shares, some do buybacks, all different stuff. The shares outstanding has, you always have to issue some shares to give to employees and different things, but we can see that shares outstanding is basically the same. I believe they're getting into buybacks. I'm going to double check, but they're not like issuing a bunch of shares or anything like that. I want to go over their balance sheet real quick and just show you that. We'll go from quarterly to annually. So their total current assets, 75 billion. This number continuously goes up. 4 billion, 11, 13, 13, 21, 34, 48, 50, 66, 75. Their cash is growing, their assets are growing at an incredible speed. And if we look at that versus their liabilities, let's go to total current liabilities. Their total current liabilities, 14.9 billion. I mean, we're talking about, and this isn't including things like their payables and whatnot, but 14.9 billion. We go to total liabilities, we're at 31 billion. And long-term cap lease obligation is 9 billion. I mean, we're not talking about debt here. This isn't like just regular old debt. They don't, from my understanding, they really don't carry like any debt. Look at this current debt and capital lease obligation, $1 billion. Like, it's really, I don't even think they have like long-term debt. Let's see, long-term deferred tax, long-term capital lease, long-term. I don't even think they're holding like long-term debt. They just don't want to pay the interest payments. There's no need to. They have so much cash. So cash flow is incredible on this company. If we go to cash flow, free cash flow, you can just see let's go on an annual basis, steady increase, just continuously increasing free cash flow year over year, which is great to see. And now, what's the stock worth? That's really the bottom line, right? What is the stock worth? So like any stock evaluation, we have to make some assumptions. I'm going to use this stock analyzer tool just to give you some idea of what you could be paying for the stock or what you should be paying, in my opinion. So we're going to do a 5-year analysis. You could do a 10-year, you could do a 7-year. Let's do a 5-year analysis, and we have to make some assumptions. So we have to assume how's the revenue growth going to be low over the next 5 years. How is their revenue going to grow? So in the last year, their revenue grew 28.7%. On average, over the last 5 years, it was 32.9%. And in the last 10 years, it had an average growth of revenue of 41.9%. I mean, these are huge numbers. The thing is, though, as you can see, the revenue growth is slowing. Now, my thing is it possible that it begins to tick up again once these hardware products or metaverse products actually get realized? And I think the answer is yes. I do think that they could start to see an increase in revenue growth if some of the big projects they're working on play out. But we have to be logical and try to be conservative. So we're going to give low, mid, and high assumptions. So over the next 5 years, because I do think a lot of those metaverse ideas aren't going to be done in the next 5 years. I think those are much longer term goals for Facebook. So I'm going to put, for the low assumption, 24%. I'm going to put mid assumption is they grow kind of how they're growing at 28%. I'm going to put high assumption, they grow just under what their 5 years of growth has been at 30%. Now, these numbers, by the way, are less than they've been growing the first half of this year. So that's something to keep in mind. Share change, they are, like I was saying, I had a feeling they were starting to do some buybacks. It does say, they're buying back a very small amount. I'm just going to put this at 0. I'm going to say they're not. I think they will buy back shares, just to be clear. But I'm going to say, just to be more conservative, they're not going to buy any shares back, and they're not going to issue more shares. As far as profit margin, opposite of growth, it is actually accelerating higher to the last year had 35.7% profit margin, whereas over 10 years it was 32.4, and over 5 years 34.4. And this is going to be an interesting number to watch, because I think, as they get into more hardware, we could see profit margin percentage go down if it becomes a large part of the business. But as they just keep getting more users and selling more, charging more dollars for ads per user, this profit margin number should just continuously go up. So I'm going to be conservative, I'm going to say 30%. I'm going to say on the mid assumption, 33%. And on the high assumption, I'm going to put 38%. So, give it a nice basis. 30% is lower than, even the 10-year history. So I don't see it being 30%, but I like to be conservative when we're talking about investments. So 30, 33, and 38. Free cash flow as a percentage of revenue. So free cash flow as a percentage of revenue was 25.6% in the last year. It was 31.5% over the last 5 years, and 32.4% over the last 10 years. So slightly de-accelerating. We're going to put, for the low assumption, 24%. I'll put 28% for mid, and I'll put 32 I'll put 30 flat for the high assumption. Basically less than the 5 years, but just better than the last year by a good amount better than the last year, but not as good as the last 5 years. For PE, so today Facebook has a PE of 31.5. I personally think that's a high PE, but the thing is, it's a growing company, so it's, you should pay a higher PE when a company is growing. What should its PE be in 5 years from now? I don't know. In my opinion, probably somewhere around 25. That's what I think it will deserve. And if these AI projects and hardware projects are coming out and they're becoming a even bigger company than they are today, maybe it will even earn a higher PE than that. So I'm going to say 24. I'm going to put 26 as the mid, and I'm going to put 28 as my high PE. So we're going to have the PE coming down, basically. Price to free cash flow is right now 44. I'm going to put the same numbers as 24, 26, and 28 for my price to free cash flow. Like, I'm going to just copy my price to earnings, basically. And if you wanted to make your desired annual return, if you want to make 10% every single year for the next 5 years compounding, so I'm just going to put how much should you pay today. So we're going to do it with these numbers, and then we're going to change them up. This would give you, right now the stock is $373, and if all of what I said comes true, this is assuming in a worst case scenario that this stock, from when I say worst case scenario, worst case based on the assumptions I put in, the stock should be worth $405 today. And let me zoom in a little just so you guys can see this better. So $405 today, if the low assumptions come true, and we're going off of price to free cash flow because we're putting that they're going to have less free cash flow as a percent of revenue compared to profit margin. So 405 compared to 373, and at 405 you'd still make 10% a year compounding for the next 5 years. And on the highest assumptions I made, going off of a price to earnings of 28, so a P of 28 in 5 years from now, with the 30% revenue growth, it's basically, you could pay $920 a share today, and you'd still make 10% if those numbers come true. Now, where do I think it's going to come? I think it's probably somewhere in the middle. It might even be somewhere in between low and mid. So let's do something like that. Let's change 24, 28. Let's put 26. 30, 33. Let's put 31 and a half. Free cash flow 24, 28. Let's throw it as 26%. I'll put it even as 25%. Let's get a little lower. Close, basically what it is right now. It's a little lower than that. We'll make it a little lower than what it is right now. P is 31. We have a 26. Let's say it's going to have a P of 25, and a price to free cash flow of 25 as well. You want to make 10%. We're just going to look at the new mid assumption here. This was a little bit in between the low and mids from before. Basically, the stock worth 472 if you're going off of price to free cash flow, up to almost $600 a share off of price to earnings. So at 373, assuming you believe that Facebook is going to continue to grow and grow based on the things that I believe Facebook 3.0 is working on, that's where I think that growth will start to come from. And also, obviously, they're going to charge more dollars per user, so their ARPU is going to go up in, I think, the rest of the world. And then there's all these other things like, as more internet comes in, a lot of the world doesn't have even internet today. So as they get on the internet, what do? I mean, they want to social. The things people want to do are basically like learn. They search things on Google, they find out things and whatnot, and they socialize. We're social. People are social, creatures. So when you go to socialize, you're probably using a Facebook product. So do I think it's a buy? I mean, the answer is yes. I own Facebook personally. I've owned it since I've owned it for a long, long time. Far less, I've made a multiple on my buy-in price already a few times. But even at today's price, if I didn't own it, I would be buying it, especially on the dip, because I think it's a core piece of a good portfolio, especially when running the numbers, you get these fair value prices. So that's my opinion on the stock. And I also wanted to bring up that a lot of people say, oh, like, are you buying it now or this or that? And I say, well, I have it already. And they say, well, why aren't you buying more or whatnot or this or that? And I think it's important to note that if you own a stock, I think you should always ask yourself, would you buy the stock if you didn't own it at today's price? And if the answer is no, you shouldn't own it. Obviously there's exceptions. Oh, you want to wait till it's long-term capital gains for tax reasons or things like that. But if it's not, if you're not trying to wait for that, or there's not some, strange reason you're holding it, if you wouldn't buy the stock today, just because you paid much less for it in the past is not a reason you should continue to hold it. If you wouldn't buy it at today's price, you should sell it. That's my opinion, at least, because you can put the money into something you would buy at today's price. At all times, you're choosing to have your money in a stock, in cash, or in a different stock. So, if we're talking about the stock market, outside of other investments. So, by me holding Facebook, even though I'm not buying it today, I'm holding my position. I'm basically saying I would buy it because I have the choice to have that money in cash or in another investment. And I'm not holding it because I don't want to pay the tax on it right now. There's a lot of opportunity in the market for me to make money putting it in another stock. I don't mind paying the tax if I see a great enough opportunity. It's because I think the future for Facebook is still extremely bright. I think the numbers in this earnings report were great. And frankly, guidance, you never know. Guidance is something that management usually wants to be conservative on so they can beat it. That's the way I look at it. So I'd rather them be conservative and come out strong next quarter, even if it has to hurt the stock in the near term. So, I like founder-led companies, and I like companies that don't just stop innovating. And it's, from everything I've seen, they are continuing to innovate. So yeah, that's what I think. If anyone has any questions, if anyone wants me to look into any other companies, you can always drop a comment. Let me know what companies you want me to look into. I appreciate you guys going live with me today, everyone who did. And until next time, I know we've been doing a lot of live videos recently. I am going to be posting some videos I'm working on, so those will come up too. But I've been wanting to get a little into the flow of the live videos because it's new and I think it's interesting. And it's a quick, easy way for me to kind of run through these numbers with you all in real time. So for everyone who's enjoyed it, I appreciate you for coming on. And yeah, we'll probably hop on tomorrow again maybe, but definitely going to be uploading a video probably tomorrow. So stay tuned for that. And yeah, talk to you guys soon. Thanks. And thank you, Mike. Appreciate you jumping on, Mike.